Okay, gifts. Yes, people give gifts of virtual currency to other people, and this is no different than gifts of any other property. Okay, remember that 67 Chevy pickup? You have to know when did the donor acquire the property, the cost basis of the donor when the donor made the gift, the fair market value at the time the donor made the gift, and the amount of any gift tax that was paid on Form 709, which is probably zero. Okay, so the usual gift rules apply. If the fair market value of the property at the time of the gift is greater than the donor's adjusted basis, the recipient is just essentially stepping into the shoes of the giver and taking on the giver's basis, right? Your basis for figuring a gain is the same as the donor's adjusted basis, plus or minus any required adjustments to basis while you held the property, which in the case of virtual currency is, you probably didn't make a lot of upgrades to that virtual currency when you held it. Your basis for figuring a loss is the fair market value of the property when you received the gift, plus or minus any required adjustments to basis. Now, if you use the donor's adjusted basis for figuring a gain and get a loss, and then you use it for figuring a loss and get a gain, you have neither a gain or a loss on the sale, the disposition of property. I'm going to lead you through a couple of examples. Okay, so my associate is named Mona, and I like to harass her a little bit because she doesn't believe in virtual currency. She'd rather clean the office floor with her tongue than deal with virtual currency. So she's my favorite example for something like this. So let's say I give her a gift of 1 Bitcoin on her birthday in February of last year. The fair market value was $992. My basis was $491. Mona sold it a month later for $1241. So the question becomes, and of course, since we're tax geeks, we wrote down, the fair market value on the date I gave it to her because we're good at that kind of stuff. So the adjusted basis is less than the fair market value on the date of the gift. So she steps into my shoes, right? And her gain is $750. And since the holding period was 1 year and 1 month, it's long-term gain. Let's say again, I gave her that full Bitcoin on her birthday, and the fair market value was $992. And again, this was my basis. She sold it for $990 immediately. Just happened to be down a couple of bucks. So what does she have? She has a short-term loss. It hasn't been 366 days, okay, because I bought it that same year. Her short-term loss is $2. And finally, gave her the gift of the Bitcoin, fair market value of the date $992. I bought it in January of that year for $1,073. She sells it a week later for $999. Now, so here the sale price of $999 is in between the fair market value of $992 and my basis of $1,073. So she has neither a gain nor a loss. So of course I have to tell her a couple months later that the value of Bitcoin is now just about hit $5,000, and she just sticks out her tongue at me or something like that. Okay, now loans. I never even thought about the possibility of loaning someone virtual currency until a client called and asked if he could get around taxes by loaning someone virtual currency, letting them hold it while it appreciates, and then getting it back after it appreciated. Now, questions like this, I know that I'm like momentarily baffled. My brain is like going, wow, what? And I have to stop and think, okay, now what if this was a 67 Chevy pickup? I can loan it to somebody for a year, and maybe it is appreciated, but what difference does that really make? So always in these circumstances, you just revert to time-honored tax principles, and that's going to get you through 90% of everybody's questions. So here's an example. Let's say I loan Mona a Bitcoin, which I had purchased for $2,500. We agree that Mona will repay me that 1 Bitcoin 6 months later. Being tax geeks, we agree on periodic interest payments. We write it up. We shake hands on the deal. Now, so I bought it for $2,500. Let's say that when I loaned it to her, it was worth $3,500, and when she gives it back to me, it's worth $4,500. Now, I haven't evaded anything because the reality here is that my basis is still $2,500. I have to certainly report the interest payments as I receive them, whether it's in virtual currency or actual dollars, but my basis is still $2,500. My basis has not magically increased simply because I loaned it to someone. And, that's what this person who asked the question didn't really understand. Okay, now, if you are going to loan someone virtual currency for whatever reason, we need to be careful that the IRS will clearly see that that's not a sale. So what are the kinds of things we want to look at is we would want it to be documented that the transaction is a loan. Both parties will report the transaction as a loan. Repayment should be made in virtual currency that is identical in value and denomination to that which was lent. Okay, because if I loan Mona Bitcoin and she repays me in Litecoin, that's not clear that's a loan. That might well be a sale. Of course, interest payments should always be clearly specified. And we would want to discuss how virtual currency forks will affect the loan. What if there's a hard fork and I can't get back the exact same currency that I loaned? So if for any reason you have a client who wants to make a virtual currency loan, even after you've explained that this isn't a quick and interesting way to avoid taxes, these are the things you want to make sure that they look at. Okay, donations. Now this is very interesting. What we know about appreciated property and donations is that we can donate appreciated property to a charity and deduct the fair market value of that property without paying tax on the proceeds. So, hooray, it's a smoking deal for everybody. Now the question is, does virtual currency qualify? So the IRS says that appreciated property is capital, it's capital gain property if you would have recognized long-term gain had you sold it at fair market value on the date of the contribution. So, so far I'm going for a yes here. Capital gain property includes capital assets held more than a year. So if I have Bitcoin that I've held more than a year, I'm going for this as a capital asset. Includes most items of property I own and use for personal purposes or investment. Yep, so far so good. Examples of capital assets are stocks, bonds, jewelry, coin collections, cars, or furniture. So, it seems pretty clear to me that virtual currency, which has been defined by the IRS as property, thank you very much, qualifies as appreciated property for purposes of making donation to qualified charities. Okay, so that's actually pretty interesting. So how much can we deduct for the contribution? What we know is that if it is long-term property, been held for 366 days or longer, we use the fair market value of the property. If it's not long-term, you only get to deduct the lesser of the basis or fair market value on the date of donation. So certainly what people want to do in this case is they want to donate long-term property. Just a few things to remember, and this is just, basic tax stuff, is there's a limitation of 30%. This is not 50% donation, this is a 30% donation. And remember to file Form 8283, right? And of course, the taxpayer gets no benefit if they don't itemize, something that we continually have to remind people of. Now, we know that the IRS wants wants an appraisal if the donation of value is more than $5,000, but there's an exception for example, an active market for contributed stocks or bonds. And then the fair market value is the average price between the highest and lowest prices on that date. So I say, I don't think we need an appraisal. Virtual currency, most virtual currencies, there's an active market, as long as it's not something that no one's ever heard of. But if you can go online and find out, what was the price of this currency today, what was the high and the low, I don't know why you need an independent appraisal. I think that you could very easily make the statement that you didn't have to do that. That's just my opinion. Of course, the IRS has not told us this. Okay, inheritances. Sooner or later, people are going to inherit virtual currency. It's no different from inheriting any other form of property. We don't have to worry about getting appraisals. The fair market value on the date of death is a matter of public record. What we do want to make sure happens is that our clients who have inherited virtual currency get some kind of documentation, make sure the keys don't get lost. If it's on dear old dad's computer, let's make sure they get the keys off and store them somewhere before that computer gets taken to to goodwill. So, that's the main thing, would be to educate the heirs on how to handle virtual currency. Just like anything else, you're going to want them to get documentation and bring it into you so that you've got record of what was the documentation of the value of that property. Now, of course, they can just sell it the minute they get it, and that kind of clarifies everything. That's for them to decide. Our job is to educate them as to what does this mean and how do you hold this property.